Welcome to the Techno Fundamental Report for June the 13th. As registered investment advisors, our goal is to make great decisions. We want to make good, solid investment decisions. That's our job. And one of the factors that I've learned over the years is that, based on experience, I make certain decisions and people like me make certain decisions. We believe a lot to do with our subconscious mind because we experience so many investment decisions over time. I'm talking, decades of making investment decisions. So over time, I do truly believe that your brain starts to understand certain things that you should do and certain things that you shouldn't do. Sigmund Freud said, we talked about this a couple of weeks ago, but Sigmund Freud said, it's like a water fountain. It's where the water goes up into the air and it gathers experiences and then it goes into the basin, which is your subconscious. So don't underestimate your subconscious. It's anything in life, basically. If you do it over and over and over again, you develop a certain level of experience that's not replaceable. The trees do not grow up to the sky. Extremely crowded trades rarely work extremely well. So I'm always because of my subconscious mind, I'm always very cautious when I see the masses moving in a certain direction. It's just contrarian thinking. It's a valuable subconscious thing to understand that sometimes you have to think contrary to the masses. Well, what's going on right now in some cases is that we're seeing an obsession to get rich quick. And there's a group of people out there that are on the internet. I think it's called Reddit. And then there's this Roaring Kitty. And it almost reeks of stock manipulation. But, people to get rich quick will pretty much do anything. The other obsession I see a lot out there is tax avoidance. I had someone contact me the other day wanting to know if they should invest in a fund where the primary objective of the fund is to lose money so that they don't have to pay taxes, offset other taxes. It's just really amazing to me the lengths that people will go to in order to avoid taxation. You live in America, it's the greatest country in the world. As long as we can keep our taxes reasonable, just pay your taxes and try to make as much money as you possibly can. Really, as a registered investment advisor picking stocks, my job is to give people a tax problem. Short story here, had a friend, he owned a farm, was in his family for over 100 years up in Mississippi. They raised burros and mules initially for the war, and then after the war was over, they started raising dairy cows. So my friend, for decades, had to get up at the dawn of the light and milk those cows every day, and really, I'm sure, got sick of doing that. He hated the work. It was grubby work. But anyway, one day a fellow walks by and knocks on his door. It was on a Saturday, and he was with the Lowe's Corporation, and he was telling my friend that the interstate is getting ready to move through his property and that they want to buy his property and put in a shopping center. Well, anyway, he ends up getting $15 million after decades and his family for hundreds of years holding this property. And then he put that money in the stock market in 1995 and did incredibly well. So it was all about being in the right place at the right time. I saw an interesting statistic that I want to share with you. We know the indexes are hitting new highs. The S&P 500 has hit a new high. The NASDAQ has hit a new high. However, it's hitting new highs on, here's the NASDAQ, less than 50% of the stocks in the index are above the 50-day moving average. Now, this is true for the NASDAQ as well as the S&P. And it's basically just telling you what the situation is. It's not predicting anything. It's just simply saying the market's making new highs on poor breath, which is not the ultimate benefit. Now, I wanted to kind of go over some growth indexes that we follow. This is the IPO Renaissance Fund. These are all stocks that went public as IPOs recently. Got a nice little breakout on this yesterday. Also, we've moved into the green on the trend meter. So the growth stocks are actually starting to look a little better here. This is a momentum fund. Growth stocks with momentum, the ones making new highs. You can see here how we've moved into the green, and we got a nice little breakout here. On the third one here, this is the NASDAQ 100 equally weighted index, and you can see big improvement here, breaking out of a base, looking much more positive. If we can get this market to expand its breadth, meaning more stocks are participating, that is a very, very bullish sign. Now we can see here NASDAQ making new highs, trend meter is good, looks pretty strong, looks very strong, very positive. This is the S&P, same thing. We're getting those new highs, looks great. However, and then also making a point here, the aggression index, which is where we're measuring the NASDAQ versus consumer staples, it is really breaking out here into meaningful territory, which is a very positive. This is an important indicator. We've had good results with this particular indicator. However, I want to make the point also that we got the inflation numbers yesterday, and they were favorable. What I'm doing here is I'm taking commodity stocks, and I'm comparing them to the S&P 500. And you can see here, this is making new lows. So the commodity prices, we're at full employment, which is good for the stock market. And commodity prices are soft and coming down and underperforming the market, tells me that inflation may be somewhat behind us. Speaking of experiences and so forth, I went through the 1970s with hyperinflation, and so far this has been somewhat of a cakewalk compared to that. Now, what else I'm doing here is I'm taking the Russell 2000, which is the small cap stocks, and I'm comparing it to the S&P 500. You can see the extreme underperformance here. So if things stabilize, and this particular index is what we call a risk-on, risk-off index, meaning the Russell 2000. These are small companies. Most of these companies don't make money. And so they borrow money in order to provide cash flow to the company until they do make money. And so they're going to have to renegotiate their debt at higher interest rates. This is what I think is really causing the problem here. Hopefully it starts to improve and interest rates come down. Now, one stock where we're seeing some very good action, and we're seeing very good action in the technology stocks, Taiwan Semiconductor is actually expanding quite aggressively here into the United States with the government act that was passed recently. The stock is in a very nice uptrend, looks very similar to NVIDIA. This company manufactures all the chips for Apple, NVIDIA, and most semiconductor companies use Taiwan Semiconductor as a contract manufacturer. So we got some good volume yesterday. Both relative strengths are positive. I would keep an eye on it. It's broken out here. If you get somewhat of a pullback into this base here, might want to take a look at it. So if you have any questions, please let me know. Thank you very much.